it will go to the back. A collective wave will start. This trend will change. Now these are impulse waves. We have three that are the moving waves. Impulse wave, the impulse wave will be the counter trend. We will call them character waves. Now which are the impulse waves? We have 1, 3 and 5. The question is, which one is the longest wave? Now mostly wave 5 was considered first, but now mostly wave 3 is considered the longest wave. When a 5-wave pattern is found, the wave structure is complete. What do we see after that? After that, we get a 3-wave structure. What is a 3-wave? That is a period of consolidation, kind of like a collection wave, in which the price keeps moving around on its own and does not follow the previous wave. So this can be called consolidation or collection or whatever you prefer to call it. So the character waves, if we had a bad trend, then the character waves will be bearish if we had a bearish trend. So obviously the character waves shall be bearish. Now there are 21 patterns found in these character waves. Okay, so we won't be going through that. We will just be trying to understand the way they move. So we will be discussing 3 types of character patterns. One is the zigzag, the other is flat sideways movement, and the third is triangle. Now, when we discuss the price action pattern, when you compare those patterns and combine them with character waves, you will find a resemblance. Why will you find that resemblance? Because the price moves in the same way. Now, the work you have to do is to hold your ear from the front or hold your ear from the back. You will be holding the ear, so the pattern of moving the price is the same. You can change its name, you can change its label, but the price will always move the way it has been moving from the beginning. It doesn't start changing rays after studying that and understanding that. What does the earlier wave tell us? It helps us go into the depth of that when we need to find the connection moves. When do we need to find the reversal pattern? When do we need to find the continuation pattern? So basically we have all of these. So what is a zigzag formation? It has strips movement against the predominant trend, and the wave it has is the shortest. And remember this: multiple zigzags in a single connection, and the connection wave can be broken down into 5 patterns. As we discussed, patterns will repeat themselves every time because the connection wave will obviously be repeating itself to some extent on a small time frame. We have the flat formation deep dive. Now it's not a zigzag, so there won't be 5 patterns. This will be just a simple zigzag. It will be moving up and down. We can also call this an actual rectangular pattern. So it can be connected with that. So B and A and C are there. Sometimes it will be rigid, sometimes back and forth. So you can see in the picture, nothing more to love with. Then you have triangle. Now triangle, as we studied in price action pattern, triangles, how to read them. The same triangles we have seen here after the trend, how to draw them. We have symmetry, ascending, descending, same thing. So nothing hard to understand. Something is what it is because everything is similar. The result that the Elliott wave reached will be the same result. The result that Wyckoff reached will be the same. The conclusion the gain reached will be the same because the prices move in the same way. However you want to read it differently, it's your choice. So that's why I say that all trading methods work, but not all trading methods work for you. So you should focus on that. Pay attention to which trading methods work for you. Now the next thing we discussed is that a wave is a pattern in which patterns are found and patterns keep repeating themselves at every level. We have classified them into different cycles so that they can be designated and identified. First, we have the grand super cycle. Date this multi-century super cycle that historians might observe, which has no relation to our trading. Understand, we plan for the next 1,000 years, thinking about the future of our generation, but that is not our thought. So let's move on to the super cycle. The time period of the super cycle is like from 4 to 5 decades to 6 to 7 decades. That is 40 to 70 years. So this also does not benefit us. So we move on through the cycle. Just a simple cycle, which is a conclusion of many years. It may also go into decades. They can focus on that. And then you have the primary cycle, which is months to years. So basically, in the next chapter, we will discuss position trading. So primary cycles are used by position traders. Then you have intermediate cycles, weeks to months. These are used by position traders and swing traders as well. Then you have minor cycles that are weeks. Then you have minute cycles that include the days. You have minute cycles that include the hours. So these cycles keep on repeating themselves. Then you have, last but not least, the sub-minute cycles that are just simple minutes. So these cycles repeat themselves in minutes, hours, days, weeks, months, years, centuries, and the pattern will keep on repeating itself. The foundation of a technical trader is that history keeps on repeating itself. So you have to understand one thing, that the real world analysis you will do in real time. It will really fit in the exact measurements you have seen in your examples on pictures. So you have to be willing to try to understand market price. And when will you gain more understanding of this? When you spend time on charts, try to read the empty charts, because trading is not pressing. The price and the downward direction, which is do not touch. So this is the cardinal rule. Tension number 3, to be long and sharp in extend wave for frequency, find support, resistance, and Fibonacci level. That is, we calculate, do Fibonacci draw, and try to look out for Fib level, especially trace from 0.618. So we can enter with our trend from there. So what did we learn in this chapter? There are repeatable patterns that reflect market psychology, and they repeat themselves in the same way on every time frame, from centuries to minutes. The market moves in a 5 to 3 wave pattern, 5 pattern, impulse pattern, 3 wave pattern, and corrective pattern. In corrective patterns, there are zigzags, flats, and triangles, and we have to keep an eye on the 3 cardinal rules, and if they become invalid, then move. Execute the 5 pattern, it becomes invalid, and you have to practice them and be patient with it. Have patience, patience for this, patience for this, patience for this, brother. You have to designate levels, you have to designate targets. When will the market go there? How will it go? It's for the market to decide. Is it your father's market or mine? It's your father's market, so we are never supposed to decide the price or when to do it. We can anticipate, and if we do, we can set a backup plan, set a stopwatch, and set a target take profit. But when and how will that target be achieved? That is not up to us. It is up to the market.
So what we can do is rate the market and anticipate the next move. Now we will go into the harmonic patterns